Tax season 2025 is here. So every NRI will have one question in their mind. As an NRI, is it required to file income tax return in India? In this video, I want to decode all aspects of ITR filing as an NRI in India. So by the end of it, you will have clarity whether it is required in your case or not. So this is going to be a very important video. Stay tuned till the end. Let us start this video with an example of an NRI, and let's name him as Naveen, who is living in Dubai. Naveen loves to trade in Indian stock market, but always profit would be around 1 to 2 lakhs, so he never bothered to file tax return. He would also send 15-20,000 rupees for covering the expenses to his parents in India. He would also pay health insurance premium for his parents. But since these amounts are small and it's not high value transactions, he never bothered to file income tax return. After a few years, he realized after interacting with some of his friends that he ended up paying excess TDS, which by filing the tax return he could have claimed as refund. This is just one of the examples. There are many examples why we NRIs many times do not realize how important it is to file ITR. Let's see in today's video the question every NRI always has: should an NRI file income tax return in India? Now this is going to be a complex topic. That's why I have decided to break it down into few points. If you are new to this channel, I am CS Keerthana. I run a firm which is The Consultancy, and I assist all NRIs in tax planning, FEMA consultations as well as investing. If you are interested in availing any of these services, please contact us by visiting www.keerthisfinfo.com or the number which is displayed here. You can also write an email to info@keerthisfinfo.com. Now let's dive deeper into today's topic. Should an NRI file tax return? As I have already told you, we are dividing this whole video into few points. Let's see first what is the base for this taxation. Second, what constitutes Indian sourced income for an NRI? Third, what are the situations or circumstances when it becomes absolutely must? It's not optional, it's must to file tax returns. Lastly, what are the benefits of filing and consequences of not filing? Let's start with the first point. What is the base for taxing NRIs? See, in India we have residency based taxation. That means if you are resident, your whole worldwide income is going to be taxed in India. I have made a detailed video on who is an NRI. Watch it here if you haven't done so far. This gives clarity on who is an NRI and how it is determined. Remember, it's not one-off exercise actually. Residential status determination, it should be done every year. If at all any NRI meets any condition of resident, then he ends up losing his NRI status. Maybe without his knowledge also many times. So once he becomes resident, then Indian taxation gets attracted there. It so happened with one of our clients that without even knowing, he was visiting his family multiple times. So he ended up becoming resident and he had to pay hefty tax on his overseas earning. So every year you should determine your residential status. Now the second point, what are the different income which can come within the tax bracket for an NRI? Because we keep preferring Indian sourced income, right? So one should know what is this Indian sourced income. Whenever NRI earns income from below mentioned sources, this will constitute Indian sourced income for NRI. The triggering point is 2.5 lakhs under old taxation, 3 lakhs under the new rule. So this is a threshold limit or triggering point which NRI has to consider. Once this limit is exceeded, you have to file the tax return. Now let's see the base. What is constituting this Indian sourced income? First one is salary income. Wait, are you thinking, why should my salary in foreign country be taxed in India? See, as an NRI, you don't have to pay any tax on the foreign salary. I'm saying as an NRI. But if it has come from Indian company, Indian clients, services rendered in India, please file your tax return because it attracts tax. This answers why should you file ITR even for salary received in India, right? Let me tell you, it's not so simple. Because let's assume one is working in foreign country on some project. The project is belonging to Indian company and he thought of taking the salary in India because maybe some expenses are to be met there. Now trust me, though he is working on foreign project, he will attract Indian taxation because the salary receipt is in India. So he will end up paying tax here. Many times, that's what I am telling, it is case specific, more complex than what you are thinking. If you are confused, please consult a tax professional. Just because it's salary, don't be under an impression that it's not taxed in India. It depends on the circumstances, your residential status and who is giving it, where it is received. Let's take up second, rent. If an NRI is having rental properties, I am sure many NRIs have it, it constitutes income from India. You all will be familiar, there will be 30% TDS. The calculation for NRI and resident for rental income tax is same. You may receive the amount in the country of residence, but rental income from India is taxed in India in the hands of NRI. NRI also can claim, home loan interest as deduction. He can claim 30% standard deduction or the municipality taxes which is paid, etc. See, when I am talking about these deductions, if you want to avail this, remember you have to file your ITR. It's absolutely necessary. When you are renting out your property, the tenant has a legal obligation to deduct and deposit TDS, tax deducted source, before paying you the rent. He will also file Form 15CA in case his NRI owner wants it to repatriate, and above 5 lakhs, repatriation requires Form 15CB from CA. So, if you have any rental income exceeding 2.5 under old or 3 lakhs under new regime, it's must for you to file ITR. Otherwise also, please consider filing. At least whatever deductions you can take to lower your income, you can take it only by filing income tax return. Let's go to the third point, income from other sources. Let's say you have kept some deposit in your NRO, non-resident ordinary account. This is taxable. The interest is taxable. So, it's considered as income from other sources. But remember here, NRE and FCNR deposits are completely tax exempt. They are not within the tax bracket. Now, the next income source is if you have set up any business with your family member or friends back in India, then this is also going to attract tax under income from business and you must pay tax and file your return. If an NRI has sold any capital assets, stocks or MF, then also filing of return is compulsory, even if the profit is below exemption limit. I know many of us are investing in stock market, so this is an important point to remember. So, if you have any MF or stock investment and you have habit of rotating it, file your taxes. These are all heads of income which constitute the base of income source in India. When I am referring to, Indian sourced income, you can consider all this. If you are falling in any of the category, there is absolutely no doubt that you have to file your ITR. Now, let's see when filing of income tax returns becomes absolutely compulsory for NRIs. Remember, there are certain situations or circumstances where it is no more optional for you. If you are falling in this category, you must file your ITR. Let me elaborate it further. If the income from Indian sources, which I have mentioned now, is exceeding exemption limit of 2.5 or 3 lakhs, or if you have deposited more than 50 lakhs in your NRO, or 1 crore in your current bank account, or your travel expenses, they have exceeded 2 lakhs rupees, or TDS or TCS had exceeded 25,000 rupees. These are the scenarios where filing of income tax returns is must. You don't have choice, you must file your return. Now, let's see what are the benefits of filing, because something should motivate us to file, right? First is TDS and deductions. We all know as an NRI, we are always subject to highest rate of TDS. TDS is withheld at higher rate because in case if the tax collected by Indian government is lower than actual obligation, then it's not easy for the Indian government to recover considering all the cross-border complications, compliance issues, right? That's the reason they are going to keep it at the highest rate. So what happens? In many of the cases for an NRI, TDS always exceeds the actual liability. Remember, even while selling physical properties as an NRI, we don't even have indexation benefit. So it's 12.5% TDS for long-term capital gain, 30% in case of short-term capital gain. It's quite high. What about equity and MFs? This is also higher. Any listed securities, short-term TDS is 20, long-term capital gain, it's going to attract 12.5% TDS. So these are not, the rates which you can afford to ignore. If you have sold any properties, please consider filing ITR. The only way that you are able to claim the TDS, excess amount of TDS paid, is by filing ITR, right? Otherwise, you will always end up losing that part of money to the government. Under old regime, let me also tell you, not only TDS, there were many deductions which were allowed even to NRIs. For example, under section 80, many of them, children tuition fees subject to limit, life insurance premium, principal repayment of house loan taken, etc. These are allowed to NRIs only by filing tax return. Second point, carry forward of loss. This is often ignored in many of the cases. See, let's say you had losses in your stock trading in a particular financial year and you forgot to file your tax return. You can't carry forward the loss. It's possible only by filing ITR. Let's take an example. If you had bought a stock for 1 lakh rupees and you sold it for 70,000 rupees, you are sitting at loss of 30,000 rupees, right? If you're filing ITR, then only the loss can be carried forward in the next financial year and it can be offset against the next year profit. So what happens in the next year? By filing return, you had actually minimized the total tax liability by reducing the profit. Next point or the benefit is proof of financial credibility. This point also we always overlook. ITR in India, it is taken as a proof of financial credibility. It involves many situations. Maybe you are applying for loans or term insurance, medical insurance, even credit card issuing companies, they check ITR to evaluate consistency of income. Or tomorrow you decide to start some business in India. Who knows, this might be required to get the tender or contract bidding. Many of the countries these days, they consider ITR especially for granting PR, long-term visas because they are relying on ITR to understand financial credibility of their applicant in their home country. So just a simple filing. This is carrying hidden benefits, right? Fourth point or fourth benefit is avoid all unnecessary headache or regulatory compliance. If you miss tax filing deadline, there will be penalties, interest charged on the amount which is due and prosecution in extreme cases. I know many of the times we NRIs don't even check our income tax portal. So we will never be aware of any income tax notice also. And what happens if we miss answering it? This leads to ex parte order and lot of complications later. So even a simple show cause notice can give you unnecessary headache. By filing tax return, what you're doing is you're keeping a record with the IT department that look, I'm an NRI. I did all of these transactions and I built these assets and these are my liabilities and this is the source. Finish, right? Filing of income tax return is justified and it feels like worth doing only once we end up suffering all unnecessary headaches, consequences of not filing it. Trust me, I have seen many people regretting later. That's it for today. I hope this video has given you clarity on when you have to file income tax return in India. In case of any doubt or in case of any professional assistance required, don't forget to contact us at the number displayed here, or you can also write an email to info@keerthisfinfo.com. And if you like this video, please don't forget to subscribe and share this video with your friends. See you next week with another video. Till then, bye-bye.